Tesla's Q3 production at 343,000 and delivery was a decent number. The issue is it does bear a review of how large institutions are viewing those numbers against what the hedge funds are saying about those numbers and what the general mood is for the stock. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like daily updates on some investing and trading ideas for Tesla and other entities, please join us. We also have classes in this space. So what I wanted to review today is that there is obviously we got a chance to see what the numbers were. I've been delaying my reaction to these numbers because we have an interesting phenomenon going. In the good old days of a year and a half ago, any earnings announcement resulted in dramatic moves, either up or down when it came to Tesla. That has now changed because there's so many established ways to understand what the production of Tesla is. It's reduced the impact when that number comes out. In the case of the latest round, as you saw, Tesla was about 280. It dropped probably $12 right away after the markets opened and has continued to fall. What we've been waiting on is something, as you know, that's called the 3-day rule. Basically, the hedge funds have a chance to react instantly. When it comes to institutions, they tend to take the time to review how those numbers look with their consultants and then gradually either buy or sell depending on how things were perceived to be going into the market. And we don't see dramatic movement in this portion of the market until after a few days of sort of review before execution. Now, we're on Wednesday. Obviously, the number came out on Monday. We're starting to see what those institutions are saying. On one hand, we're seeing some upgrades by analysts. On the other hand, we're seeing the stock price fall. Now, the one question mark that might be lurking here is if Elon is selling to prepare for the Twitter purchase, that obviously could affect things. But in general, it seems that there's a neutral to downward trajectory of the stock, which suggests that people are okay in terms of a hold position right now, but it didn't generate a great deal of enthusiasm. So why is that? Well, there's this concept called growth. So if the entity is at the growth level expected, that's one thing. If it's slightly above, that's another. If it's dramatically above the growth level expected, that's when you tend to see a nice push in the stock price. And clearly we did not see that, excessively dramatic updraft. And I can't say this wasn't unexpected given that there were some shutdowns for redoing things in Shanghai in particular, but there's also been a delay in the ramping of production in both Fremont and in Germany. Now, I'm still in a total scratch my head mystery zone on what's going on in both Fremont and in Austin. The reason for that is we're 3.5 years into the build out of these facilities and we still have not achieved dramatic production. And the question is, why is that? And the answer is, we don't know. And the challenge is when the markets have a bunch of unknowns relative to what's going on, the tendency is to go neutral or south, which is kind of where Tesla stock price is currently. Now, so we have all these interesting data points. Elon pretty much admitted that 1,000 units a week coming out of both of these factories does not meet breakeven. We know this because he pointed out that we basically have money furnaces. Those are money-losing facilities, and production revenue profit from the other facilities have to make up for this. The next question is, well, what's the delay? What's the problem? And the answer is Elon's not sharing, and we don't know why those facilities haven't ramped. Now, we believe that there are two possibilities here. Number one, the chip shortage is starting to affect Tesla's ability to circumvent the backlog. That's, I think, a decent chance of that. The second issue that pops up is we actually spoke with one of the largest suppliers of lithium to Tesla, and they're having issues with ramping as well in terms of opening new mines that from which Tesla can get material it needs as we produce more lithium. So Tesla's solution has been to move to CATL, LG, and other suppliers that may already have sources for their lithium, and then using those sources to help them fill in and add more delivered vehicles. So I believe that, this, how are you guys going to keep growing? The factory confirms where we're at. But there's actually another data point that's popped up, which is we've now seen in China in particular, the number of days prior to purchasing a Tesla have been dropping dramatically of late. So what exactly does that mean? Well, it's a possibility that the shutdowns related to COVID in China currently are affecting the ability of consumers to get their vehicles. We're also having problems with electricity given some of the rain shortage / water shortages being experienced in China currently. So there are a lot of headwinds from many directions as we're describing. I really don't think demand is an issue. I mean, there's a lot of places where it does take a long time to get a Tesla if you want one. And even if China's length of time to backlog has shortened, it hasn't shortened in places like Australia that are eager to get any and every car they can as soon as they can. So I think we're okay here. We also have now the Semi coming aboard, and we're starting to see packs go to the Semi that might have gone into vehicles. So there's a lot of outlets for the use of the productive capacity of Tesla currently. And so therefore, I'm not really worried about demand, but I wouldn't put the marketplaces being beyond worrying, and therefore it starts to affect the stock. So in general, I think the number of 343,000 is not bad. It's decent, but it's one thing to meet the goal. It's another thing to exceed. And Tesla is not exceeding what the goals might have been for those involved. Now, there is a possibility because we are starting to get more mega packs produced and delivered to large utilities, particularly in California, that can help bring in new numbers that would increase profit and revenue nicely, that could sort of fill in the gap for the autos not being very impressive. The problem there is the auto is so huge that it's hard for other parts of the business to catch up with it. At any rate, I think the quarter was okay, not terrific, based on the numbers we have. There are some good reasons why things have slowed down. There are some headwinds that we just reviewed, not to mention potential shutdowns related to the lack of gas in Germany coming up. And so I believe Tesla's navigating the headwinds nicely, given how competitors are doing in terms of shutting plants down, given that they can't get chips for their vehicles. At any rate, thanks for joining us. This is Greg for Teslafaninsight. Tschüss, macht's gut, au revoir.